Good morning, friends. In previous lecture, I explained you that why central banking can be an easy subject, easy optional subject for CIB. In previous lecture, I explained it because there will not be retail banking from December this year, and moreover, central banking is quite easy subject. You can cover it within 7 days. The gap of 7 days after BFM, you can cover it with whatever lectures I am giving. You can just glance through it and you can easily score 50 plus. You can easily score. Anybody can reach up to 60, 70 marks also. So today we are going to start with our first chapter of module A of central banking. So in first chapter I will tell you that much conceptual part is not there. Most of the things are there that are objective in nature. So you have to just keep you have to remember some things, some facts you have to remember, and our chapter will be over. I have cut short the notes of first chapter. That is enough for you. I think most of the I will tell most of the bankers don't have time. Actually, they are working up to 7:30. I know about it. So they don't have that much time to read a full chapter. And actually, the central banking IIB book is somewhat bulky. So so to reduce it to short notes and easy for you, that's why I am there for you. I am making this video. That is only the reason. Due to the paucity of time, you should be able to manage within a short period of time. You have to remember so many things. So that's why I am taking so much efforts on these lectures and on these notes. So I want to tell you one thing. See the video up to the end of the lecture, and please don't forget to like, share, and subscribe the video, because like, share, and subscribe. These are just motivation for the video maker, that people are liking our videos and they want it more lectures on central banking. This is only the reason. There is no concept like monetization behind this likes and subscription. We will not get money for that. So it is just for the motivation. Maximum you people share it, like it, subscribe it. It just give a motivation for us to make more video for you people and to simplify central banking more. Second thing is that I want to tell that so many people will find it difficult to get this central banking book also. Sometimes it will not be available on Amazon site also, and after purchasing also, that much time you people don't have to read this much 300 and 400 pages book. So overall, I am cut shorting your time. So that is enough. We'll start our first lecture of central banking. First chapter. I am starting from module A. So first chapter name is Theory and Practice of Central Banking Evolution. So first chapter is all about the evolution of the central banking of different countries, how they have evolved, what are the name of central bank, how their structure was different. That is only the first chapter. We will finish it 5-10 minutes. So the first point you can see it here. First point, primary stimulus for establishing central banks was the exigency of the war financing. So you can think about that from 1870 to 1913 or 1950. That period especially was the different private banks was spreading through different countries, and there was not actually a mainly a central bank actually at that time. But this war situation when started, basically first world war situation in the 1913 to 1919, this period was first world war period. So basically in this time, countries felt the need for one financial agency who will manage for them money, who will manage their debt financing. That was the reason why so many private banks were nationalized during early 20th century, or we'll say late 19th century. So primary stimulus for establishing central bank was the exigency of the war financings, because for war the many countries need finance or money, and that is only the reason so many private banks were nationalized at that time. So this question will be asked, what was the primary stimulus for establishing central bank? It was exigency of war financing. Second point is that lender of last resort function of central bank is associated with the problem of moral hazard or deliberate solvency. So lender of last resort function, you will find in first chapter like these words are there, but in the subsequent chapters these things are explained in very much detail. So I will not explain so many things in first chapter itself. We'll cover first chapter only. Whatever jot down in that book, what is given in that book, we'll focus on that only, because IIBF exam will stick to syllabus. They will ask chapter wise as per syllabus wise only. Means theoretical part, mostly I will say 80% part will come from books only. 80 or 90% I will say. 10% part will come from recent knowledge, recent whatever practical happenings, like what is repo rate, what is recent monetary policy of RBI, or so many priority sector targets, whatever are there. These are some current related situation. 20% question will be asked on it, and 80% asked will be based on the theory based question based on these chapters. So first point is over. Second point, lender of last resort function of central bank is associated with the problem of moral hazard. Why it is like that? Lender of last resort function means this is one of the function of the central bank. For example, if there is a banking crisis, some banks are getting failed, so they need support of one main bank just to be solvent in the market. So that lender of last resort means finally, like police will come in the movies in the last scene, climax scene, like that. RBI is there now, or central banks of many country, and they will come in last to prevent bank from getting insolvent. So this problem is associated with the problem of moral hazard. Moral hazard means why? So you think like the bank will think that if we become insolvent, definitely a regulator, I mean like a central bank or RBI will definitely come to rescue us. So what they will do, bank they will lend money without thinking much, without thinking the eligibility of the borrower. They will recklessly give loan to any person. So because of that, by thinking this, they will recklessly give money. They will think that if something will happen, means RBI will definitely come. So here a moral problem will happen. So that's why lender of last resort function is associated with the moral hazard. Means deliberately solvency. Means you are deliberately you want to be insolvent. Uh, Deliberately you want to be insolvent so that RBI will come and rescue you. But it is not like that. Lender of last resort function of the RBI also, or central bank will say they will come, but they will give you liquidity at some penalty interest rate, and stricter regulations and sub prudential regulation they will impose on bank in the current scenario. So this point is over. This point, basically this point, it will ask them in question, it will be asked like lender of last resort function of the bank is associated with the dash. Four option will be there. In that moral hazard will be one option. Third point is the following supervisory body established in UK. What is its name? So it is Financial Service Authority. You just need to remember. They will ask you like that. Financial Service Authority was the supervisory body, and it was established in which country, or which central bank it represent. So it is Financial Service Authorities is from UK. Fourth point is that after Second World War, in Germany, Germany central bank called Bundesbank. Whatever you can call it, Bundesbank or Bundesbank, I don't know. You can call it Bundesbank. So CRR concept that was evolved actually, that from Germany, Bundesbank it brought it. So you remember this point. Question may ask on it that after Second World War, Bundesbank in Germany imposed dash on banks. This question will be asked CRR on banks, or which bank in country started the minimum reserve requirement concept. Like that, a question will be asked. So it is the Bundesbank in Germany who has started the CRR concept. Then for fifth point is the Central Bank of Sweden. I have written like it is greater than the Bank of England. I just want to tell you that the Central Bank of Sweden is the oldest bank. It is established in 1668. After that, the Bank of England was established 1694. You just remember it. They can ask in sequence that which bank was the oldest bank, or just put in order. They will give some option like Sweden Bank, Bank of England, Bank of Portugal, USA Bank, or Australia Bank, and we need to arrange in order. Just you remember it that Sweden was the first bank. After that, England. Just you remember two. Rest you will take care. Then sixth point is the Royal Charter of UK. So Bank of England, actually Bank of England established under the Royal Charter of UK, which also known as the Old Lady of Threadneedle Street. This is important. Old Lady of Threadneedle Street is connected with the South China Sea bubble crash 1720. So we don't need to go into the detail of what was that South China Sea and how it happened. That they will not ask. This is just first chapter only. From first chapter they will ask around 5 marks. Yes, just 5 marks or 4 marks question they will ask. So we don't need to dwell into the details of what was the South China Sea bubble crash. Just remember that Bank of England, which is established under the Royal Charter of UK, and Bank of England is also known as the Old Lady of Threadneedle Street, and which is connected with the South China Sea bubble crash. Then Bank of France. This question is important. Bank of France, which was the only bank you can think in the world at that time, exclusive privilege which was given to this Bank of France to issue bank notes for the period of 15 years. So which bank will be given exclusive privilege to issue bank notes for the 15 years? That question may ask. It is Bank of France. These are some objective type of somewhat in first chapter. Just remember it. Just go through it once. No need to do rote learning. रट्टाबाजी करने की ज़रूरत नहीं है. You can easily remember that in one glance. You will remember it. Then in Germany, we already told Germany called Bundesbank or Bundesbank, whatever you call it. Uniform system of coinage, weight and measures. This was a system which was evolved in Germany. So question will be asked on where it was evolved in Germany, Bundesbank. And I already told about the CRR concept. This concept was started from the Bundesbank itself in Germany. Then talking about the USA. This is what more important. USA Federal Reserve Bank. So Federal Reserve System, it was established in 1913. So you can think it was a war period only. So during war financing only this USA Bank also established. So when Federal Reserve System was established, it was established with the three key objective. You can remember EP. I have made the short form EP. Like that you will not remember it. But if you think about this one, EP was the main objective behind the US Federal Reserve. So they will give in option what was the objective, or they will just give this objective which bank at that time was this primary objective. Like that they will ask. So what is meant by EP? E stand for employment, P for price stability, and I for interest rate. In that EP, E and P, employment and price stability, was the dual mandate. Dual mandate for the US Federal Reserve. Means what was this Federal Reserve was established was primary three objective. First was the employment generation, price stability, it means inflation control. Third point is the interest rate, means long term lower interest rate. These three objective was there. So question may ask what was the dual mandate of the US United Nations sorry, United Nations, I'm telling. USA Federal Reserve System. What was the dual mandate? It was the E and P of the EP, Employment and Price Stability of the dual mandate. Then USA Federal Reserve Board and FOMC Federal Open Market Committee also established, and this Federal Reserve was much quite means independent central bank, means this decision was not to be approved by the president. Like if you are passing any decision you are taking in bank, and that need not be approved by the like legislative assembly. Like in our case at that time it was not like that. So their bank was independent. Like for example, if central bank is taking any decision, that need to be ratified by the our parliament. It was not case in USA. It was only the president was a miss. It was independent. The decision need to be no need to be ratified by the assembly and parliament. Like it was not like that. So it was a complete independent central bank. So up to 10 point everything is clear. So it is it is showing banks of the different countries and how what was is regarding some unique feature of the that bank, what they are evolved for what purposes it is given. So in 11 point you can see in 11 point what was I have written here in that circle. You can see origin and proliferation of central bank, mean reason behind the origin, why central bank was evolved or why central bank was made, what was the necessity of this central bank I felt at that time. So these are in boxes I have given it. I have cut short it to largest extent, and this much only important in the first chapter. No need to remember or read anything other than this. I will tell you definitely. So what was the origin and proliferation of the central bank? First point I have written banker to government, especially after First World War. Or during you will say during World War, already told you that war financing was the major reason or primary stimulus for the establishing the central bank. They need money, or public debt management or money management was the main reason for that. Separate financial agency every country felt. That's why the central bank every country established. Second reason you can think about note issue. Note issue was main second most one of the reason. Why? Because at that time what was happening, so many private banks were there, and all different banks were printing their own currency. So the problem was that, for example, in you think you can think in our India, if 4 or 5 banks are there, or you can think about different states are there, all are printing their separate currency, means to which currency will accept. First thing, which currency will accept. Second thing is that how much we need to print, how much currency will print. There was no control over it. Credibility of the currency, that was a problem. So acceptability of that currency was the main problem. So every country think that we will need only one central bank who will print only one currency, and that will mandate will be given by the legislature of that country. So note issue was the main another function that was given to only central bank, not any other private banks. Third point, you can think of supervisory function. Obvious it is because so many banks were there, and public. Again, one more point already added here: safety and security of deposit fund. This point is there. The lender of last resort. I will safety and security. Obviously, if I am putting my money in banks, I am definitely think about safety of my fund. So safety of if I am opening account in a cooperative bank or any private bank, we know the many incidents happens. Now all this year also, before years also, one private bank, yes bank issue was happened. Then so many cooperative bank, RBI has already put restrictions so that people cannot withdraw beyond stipulated some amount. For example, if above 50,000 you cannot withdraw. It is my money, I cannot withdraw above 50,000, means how problematic it is. Means I need emergency I need some money and I cannot withdraw, it means problem only. So that's why the supervisory function was given to central bank to keep control over these private banks. So these are the main 5 6 reasons. They will ask you what was the reason for the proliferation of central bank. These are all simple reasons, you can easily eliminate it. Just remember it. Then next point is conflicting roles. These actually conflicting roles. These points will come in subsequent chapters also. I will in short I will tell you here. Conflicting roles of the central bank means finance to government versus price stability issue. So finance to government versus price stability issue means these two functions are given to central bank only, but these two are conflicting in nature, because see, first point is finance to governments. This function also given to central bank, and price stability issue means price stability function also given to central bank only. Both are contradictory in nature. So finance to governments means what? Whenever government will need money, RBI has to provide it. For that, just why? Because of budgetary deficit. To fulfill that budgetary deficit, money is required. So RBI will print more money. If RBI will print more money, what will happen? It will create inflationary pressure in the economy. Problem of the price stability issue will happen. So financing to government on one point, and on one side, on other side we have to maintain inflation also, that is you have to control prices also. So both will not go in hand. So that is why it is conflicting role of the central bank. Second is regulation versus supervision. In this debate was going on in so many countries that regulatory body and supervisory body should be different in economy. Like the debate still it is going on for also RBI also, or so many bank in world, that regulation and supervision both are interested to central bank only. But the issue why it will happen, because why they are telling, if you are able to regulate it, you cannot supervise it correctly. That is the issue actually. If we are putting prudential requirements, and at the same time, so you need to watchdog it. Means how they are following it, rules they are following or not. It means you are making, for example, RBI is making some rules like prudential requirements, like for example CRR, you can take CRR regulation they have made, but every bank has to follow it. So RBI has to additionally, you have to create some processes and institution to watch their call these requirements, rules they are following or not. So both function if you give to same person, it will get overburden. So that's why it was better to separate these two function from the central bank. So it was like that. So some countries like UK, I already discussed for this Financial Service Authority. I told that was a supervisory body in UK. In India also, Board for Financial Supervision (BFS) I have written. So this issue was going on that for separation of this regulation and supervision. So what India has done, India is very smart country. What India has done, they have not made one separate supervisory body. Actually, not needed to for our economy. They have already made a board for financial supervision. This board will take care of the supervisory things. It is a working under RBI only, and it is not established like under Act or any I mean autonomous body. It is not like that. In UK, I already told you Financial Service Authority. It is also in UK also. It is created for supervisory function. It was created separately. But in another country, they have not made supervisory separate body, but regulation and supervision given to central bank only. So 13 point is the difference between developing developed country economy. It was still what is the problem actually? Monetary transmission means whatever repo rate bank is setting, central banks are setting. It is transmission of that repo rates to down level, means at a bank level, branch level. So that is a major problem in our economy. But nowadays, it is somewhat it is the transmission lag was there. Transmission lag means nothing but that was only whatever RBI will set some rates, like RBI will set some repo rate, and that should be reflected in the lending rates of the bank. But what bank was doing, it was delaying that implementation of that lending rates at grassroots level. So if RBI will reduce repo rate means lending should be cheap, but it was not like that case. So that was a transmission lag, but it is somewhat it is reduced now in India. But in earlier cases, if you think about the in era of before 2000 or up 2000 up to 98 also, you can think that. So developing country mostly transmission lag was here. That is the transmission of the whatever rate set by the RBI and what is reflected in the at branch level. There was a gap in that. That is called transmission lag. So we were in developing country means it is we are having still we are having more informal economy, more cash abundant economy. Still we are not that much cashless, but scenario nowadays are changing. You can think about UPI payments, Paytm and Google Pay and many banks apps are there now. So many people are moving towards it. So many people are moving towards cashless economy, but still we are not compared to developed country, we are not that much cashless. And informal economy also, our country is having more informal economy. You can think of the how many taxpayers are there in our country. You can think from that, so many street vendors are there, so many are not under tax bracket. Most of the transaction are doing in cash only. So what will happen if you do transaction in cash? RBI cannot will not know about it. If RBI will not know about how much cash or black money is there in economy, sometimes these policy rates will also get failed because whatever figure it is they are having, based on that they will take decision. But how much cash